Happening now, Fed Chair Jerome Powell giving his starkest warnings yet when it comes to the economic impact of President Trump's tariffs. We are listening in on that. We're going to bring you some more of those key details. Fair to say, though, Wall Street understandably keeping a very close eye on this. Joining me now, business journalist and the host of Public Radio's Full Disclosure, Robin Farzad. Robin, good to have you here. So just a little bit of what we have heard so far from Chair Powell talking about the level of tariff increases he said is significantly larger than what's anticipated, and the economic effects will be too. He says that includes higher inflation and slower growth. These are stark comments. They're very direct comments, especially coming from Jerome Powell.
Yeah, and it throws a monkey wrench kind of into his dual mandate of keep inflation under control and keep unemployment low. So what do you do if it's an exogenous shock? I mean, the playbook says you could go back to 1930 and look at the Smoot-Hawley tariff, and that was only 17 years after the Federal Reserve was founded. So you only have so much of a precedent to go on. Do you hike? Do you keep rates where they are right now? Do you give in to the White House and slash rates? It is a multi-trillion-dollar question.
Multi-trillion-dollar question. I mean, what more do you need to hear from him? What more do you think Wall Street and investors are listening for? Because those comments off the top are a lot.
Right. So if Wall Street at this point, are you rooting for bad news or good news? We're still creating a good amount of jobs, 5 years after the onset of this pandemic and this financial crisis. Remember, unemployment shot up to the teens. So prices are still a concern. There are still inflationary pressures across the economy. And if suddenly this gives cloud cover to a lot of companies preemptively, car makers, apparel makers, Walmart, Target, to go out and hike prices just purely in anticipation of inflation, and also the crackdown on immigration is on the margin inflationary. It's not going to free his hand to cut rates the way many people in MAGA and the White House and traders on Wall Street are romancing.
Right. There's also, leading into these comments, you have the World Trade Organization now forecasting that the tariffs from President Trump and that resulting fallout are going to sharply reduce not only global, but U.S. economic growth. And they've said to expect that expectations for global trade this year have, quote, deteriorated sharply. Put that in perspective. The fact that it's deteriorated sharply, I mean, how quickly do we really start to feel this?
You'll feel it. I mean, the perception and the shock just from a couple of weeks ago where he came out with that poster. But what's interesting to me is when you see this, it's not like Trump in the Oval Office is going to call in his Treasury Secretary. He's like, wait, did you just see what the World Trade Organization said? No, we can't possibly crash the global economy. He's happy to play with fire. As your prior correspondent was saying with the rule of law and the judicial system and the kind of the low-key constitutional crisis we have here. So that has to worry bankers, whether you're talking about the WTO, the IMF, the Federal Reserve, that you have a person here who believes these things work, believes in his methodology, going back to the 80s, that tariffs are good and we need to protect ourselves and cover our bases. And there's no evidence to prove that it actually works in real multi-trillion-dollar reality.
And who often puts pressure, right, at least through social media, on the Federal Reserve, telling the Federal Reserve, interestingly, to stop playing politics and basically do what President Trump wants. It'll be interesting to see what the reaction is to these comments once Jerome Powell finishes speaking. Robin, we have to leave it there, but great to talk to you. Thank you. Moments ago, Fed Chair Jerome Powell giving his starkest warning yet on President Trump's tariffs.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent.
Wall Street clearly not a fan of this new message. Joining us now to discuss, CNN business editor-at-large Richard Quest, who's actually live this hour at the New York International Auto Show. I imagine there's a little bit of chatter about this there, too. So Powell here said the public's going to pay for these tariffs and basically said, brace yourself, there's some pain coming our way.
Yes, and although he had said this before, just a few weeks ago, he sort of alluded to it and made some tangential reference. This time it was full throttle. Anybody who's used to Fed speak knew exactly what Powell was saying, that inflation is going to go up. The worry is that that inflation, once it arrives, will be persistent on top of that which is already in the system. and, you know, you go 1 + 1 + 1 equals, it means that the Fed won't be able to lower interest rates. Because what the Fed chair said is that the dual mandate, full employment, price stability, are now about to go into conflict. They're going to have higher inflation, and that's going to mean higher interest rates for a longer period. How much longer, how high, what they're going to do, no one knows because it's so uncertain. But this is not the canary in the mine. This is actually the man walking in front with a red flag.
The red flag, but when it comes from Jerome Powell, right, it does hold a certain significance for him to be that direct.
US retail sales jumped 1.4% in March, the largest monthly gain in more than 2 years. But some economists believe the surge may have been fueled by consumers rushing to buy in an effort to beat the likely higher prices that will result from the tariffs. California is suing the administration over those levies. Governor Gavin Newsom argues the president doesn't have the authority to unilaterally impose them on Canada, Mexico and China, the state's 3 largest trading partners. Let's go beyond those numbers now. CNN business and politics correspondent Vanessa Yurkovich joins us. Jerome Powell has said some of these things before, hasn't he? But there felt like more urgency to them. That was probably expected. But just explain why the numbers seem quite positive that we're getting on the economy right now with this background.
Yeah, I mean, I'll start on what Jerome Powell just said. And as you note, he has said some of this before, but I think he's taken this a step further. And he has said that he expects higher inflation, slower economic growth. And with that, he also expects that unemployment may rise. That is something called stagflation. And that is something that the Federal Reserve has a really tough time with because they can only sort of tackle one of those 3 things at only one of those 3 things at once. They can't do it all at the same time. So markets right now, you can see, are reacting to this. You see the NASDAQ down more than 3%. You have the Dow down over here more than 600 points. And this all really started after Jerome Powell started speaking. Yes, markets were rattled because of some news with NVIDIA saying that the U.S. government had put new restrictions over the exporting of their chips. So tech stocks were already a little bit shaky. And now you have this from Jerome Powell essentially saying that tariffs are going to make it harder for the Federal Reserve to do its job. Listen to what he just said.
Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension.
And now he said right there that the dual mandate goals will be in tension. That is full employment, and that is keeping prices stable for Americans. So he said that we're not there yet, but that is what may be coming because of the uncertainty around these tariffs. Also, as you mentioned, Max, retail sales came in today. They were very strong, but that was to be anticipated because economists were predicting that U.S. consumers were going to start buying a lot of things and big ticket items ahead of these tariffs coming into effect. That, I believe, that is actually car retail sales for cars up 5.3% in just the month of March. We know that Ford Motor Company said that they saw a dramatic increase in people buying cars in the month of March, trying to beat those 25% tariffs on both foreign cars and foreign car parts. 2 other things to keep in mind: furniture and clothing. The U.S. imports a lot from Asian countries, including China, which is currently hit with that 145% tariff. So those are 2 industries to keep an eye on. But I think really the takeaway, Max, from what Jerome Powell is saying is that the economy as it stands right now is pretty solid. But because of the uncertainty with tariffs, that's where we could run into some problems. And he, in his speech today, is forecasting that, Max.
Yeah, it's pretty clear, wasn't it, Vanessa? Thank you so much for that. I want to ask you, we were hearing earlier about the very genuine fear now of stagflation. It's quite a complex thing. isn't it? But this is something that economists are now warning of, and that's kind of a worst-case scenario, isn't it, for the markets?
Well, it's a worst-case scenario because there isn't an effective monetary policy tool to fight that. And I think that's what Jay Powell was speaking to today. It's a bit of a conundrum because if you're going to have rising prices and you want to tamp that down, you want to have restrictive policy. But with those rising prices, if you have slowing economic growth, then you'd like to stimulate that. So you find yourself, between a rock and a hard place. And I think Jay Powell was trying to get that message across this afternoon. And I not a prediction that we're heading there, but certainly it's all dependent on the duration of this trade war. If in fact we start to hear about some deals being cut on a bilateral basis over the next couple of days or weeks, I certainly think that could turn the tide in terms of both sentiment and the magnitude of the inflationary pressure that we'd see with this. If in fact we're still talking about the same level of tariffs a month from now, I would certainly say a lot of economic damage that has already been done caused by this uncertainty will physically be done by a pullback in spending and certainly a slowdown in hiring and a slowdown in economic growth.